Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge. Let me make sure that everybody in the chat room knows that the Morning Edge is starting. I need to put up the link. Where is my? Hold on. Did I delete it? Looking for something really quick. Sorry, guys. Did I know? Shoot, I don't know where. Oh well, I'm gonna tell people that that the Morning Edge is starting. Okay. Oh yeah, here it is. Okay.
You know we can hear you, Blake.
What's that?
You know we can hear you.
Yeah, I know. I'm like I was just trying to make sure that I let everybody in the chat room know that that we're starting, because with the time changes it's really difficult, right?
Yeah.
Well, it's like it's difficult for everybody to keep the time straight, if that makes sense.
True.
So I just want to make sure everybody knew that, hey, we're starting right now, because I know with the time change, it's been probably a bit of an issue. Anyway, let's talk about the markets and let's get through. First of all, I'm going to expand a little bit about this fallout in the. And by the way, Stelio, since you're here, did you have any more color on the on what's happening with the banks? And do you see foresee any? Do you have any opinion about what had happened over the weekend or what happened on Friday and some of these losses that Nomura and Deutsche Bank posted?
Well, it's what can I make of it? I don't know the details, so I don't know what to make of it. But it's this classical case of fear of contagion. So you have somebody failing or somebody losing a bunch of money, and then you say, who has risk to that? Oh, it's this bank and that bank, and it's the contagion effect, the domino effect. But how deep, how important will this be? I don't know, unfortunately. So I think only banks themselves know. But I guess the market is always a little bit nervous when they see things like that, because we have seen in the past just how easily one thing can lead to another. I mean, I felt it myself when I was working at Merrill Lynch after Bear Stearns and Lehman, and we were next to go under, basically. So these things you can't. You can't dismiss the probability of the domino effect and the sheer effect that this can have. I think that's why you have Credit Suisse down 15% today, and other banks following.
I mean, it's interesting. I mean, they're just like a significant U.S.-based hedge fund defaulted on margin calls made last week by Credit Suisse and certain other banks. I mean, that's just that's right. I mean, that's big news.
It echoes of LTCM and Bear Stearns and all that. I'm sure it's not that big, but who knows? That's a problem. Who knows how big this is? I don't.
Right, I don't either, and that's why I think we have to. I think we have to just keep an eye on everything.
Yes.
Just be very careful at the open today. So, all right. Well, I just thought I'd get your opinion really quick before.
Yep.
Before
yawning. Yeah, I get that.
Before yawning, I hate Mondays. It's like I cannot help. It's one of the most difficult things about what I do in this time zone is just getting up so early. It just it makes it really difficult. And what makes it more difficult is on Saturday and Sunday I can I don't want to say I sleep in, but I sleep a little bit more. And so when I come back to Monday, it's like the same thing over again, and I have like yawn like crazy, and I can't help it. It's tough. Anyway, okay, I'll sit here and not complain. Let's talk about what's happening in the markets today, and let's talk about what's up with the euro. So the euro is trading heavy, and I know I had a big spiel over the weekend about on the week ahead video about how I feel about the euro, but I'm going to just reiterate that it is trading heavy. It is not, I mean, if you're bullish the euro, you've got to be looking at this going, man, it is just trading really, really heavy right now. So I would say any rally now up towards this 118.35. I thought we might actually make a move to 118.60s, like as we open this weekend, but that has not been the case. So resistance today, yeah, I'm going to just write down 118.40. Okay, because that's basically rounding out this this previous low here. Okay, 118.40, and as long as we're below 118.40, I think we need to target 117.40, which is the 161% extension. So, whoops, it's a typo. So this is bearish. Okay, the euro remains bearish. Now the sterling, nice bounce in the pound. The pound's been pretty strong all day long. So and ever since the European Open, we've bounced, and I just don't know what to make of the pound. I think a lot of this move that you're seeing in the pound dollar has to do with the move lower that we've seen in the euro sterling. But right now, the pound dollar continues to hold up pretty well. We are pushing into this previous support. Okay, like this previous trend line support that is capping us. There's also the 50% retracement right here, and I would say that today we might push up to the 618, this previous support or previous resistance as well. So I'm going to write down 138.75. And I'm going to keep us on range because, like last week, I know we talked about the possible false breakdown, and it's really not pulling back, at least as of right now. Maybe we'll need that UK GDP number coming out this week to give us some better color. Anyway, 137.50 held today on the dip, so that's going to be support intraday. Let's talk about this Aussie. So the Aussie is doing what I had expected. I expected it to kind of recover a little bit here. I think we can probably look for a recovery in the Aussie, and because let's talk reality here. Especially with what Stelios and I was just mentioning about contagion. Do you think what is the percent chance of that happening today? If Stelios is listening in and he wants to chime in, he's more than willing to, or more than.
Well, I'm here. So you're talking about something basically escalating today.
Yeah. What's the chances of it happening today?
Today, I would say low, but definitely not zero. Okay. So I would say 5%, 10%.
Yeah. I would say there's a chance, but it's not very good of things escalating today. So as a reason, because of that, and everybody's aware, usually these types of things, that it's the not knowing is what really gets people a lot of times. It's like the hits us out of left field. It's what they call a black swan event. The chances of that happening today are probably pretty slim. So what's the chances of the market recovering at the open? Probably pretty good. And so with that being said, I think a recovery in the Aussie dollar back to 77 cents makes a lot of sense to myself. This would be, we kind of grind back up towards 77 cents. And, from a Fibonacci standpoint, it's probably about a 50% retracement of this move. It is, you got a 50% retracement comes in at 77 cents. That seems like try saying 77 cents like 5 times too, like really fast. 77 cents, 77 cents, 77 cents. It's hard. Go for it. Try it at home. See if you can do it. All right. Support. I would say intraday. I know you just tried to say 77 cents 100 times quickly, didn't you? You did. I don't want to write down support as 75.60, but I'm going to, because I think that is really key. And while we're above it, you just you have to keep in mind we're in a range. Kiwi's sitting a little bit of recovery, but oh, wow. Bank of England just said, this is interesting. Bank of England just said that inflation should not be seen as a one-off price increase, but sustained pressure. Well, that's different than what the Fed's saying, right?
Wow. Yeah.
Yeah.
You mean it's not transitory?
No, okay. I mean, what central bank has said that? Since when? But maybe, is the Bank of England dealing with something a little bit different than the rest of the world? Maybe in terms of,
No.
You don't think so, Steve?
No.
Well, they have the Brexit issue, but
yeah, that's what I was gonna say. They just spent the last 5 years. Like if I'm in the UK, I've just spent 5 years really hoarding everything because of Brexit, now COVID, and so the pent up energy that you would see in the UK has to be a lot bigger than in other countries. No comment?
Pent up energy based on what?
Lack of, if you're in the UK and you just you've just experienced 5 years of possible Brexit, we can't we're going to see what happens if the UK leaves the EU, and is it going to be problematic? And then you got COVID. So consumer demand pressures have probably been really tame and contained for the last several years. So now that we're getting past Brexit's over, we're getting past COVID, there's probably so much pent-up demand from a consumer standpoint that maybe inflation becomes sustainable.
Inflation will become sustainable not because of consumer pent-up demand, but because of supply disruptions and supply shortages, and the abundance of credit out there, so consumers can keep spending money they don't have. But that's a phenomenon that is exactly the same in all developed countries, or almost all.
So why is the Bank of England the only one that sees or is acknowledging inflation? That's my comment was, and Stelios, when he was here too, it's like, wow, look, a bank actually saying that it's not transitory. Or maybe is the Bank of England just the first central bank to acknowledge that there is going to be sustained inflation? Or
perhaps the Bank of England feels that they actually still have the tools to do something about it, while the others pretend it's not a problem because they don't intend to do something about it.
Yeah, well, they can.
Because in order for them to do something about it, they have to blow up the whole phony, economic recovery miracle, quote unquote. Because there is no way you can fight inflation and keep the markets elevated at the same time. I mean, I think there is nobody that disagrees with that.
Yeah. Okay. All right. I was just, it's, I guess it's a question that, I'm not smart enough to know the answer, but I think it's interesting that the Bank of England is acknowledging that inflationary pressures are not going to be transitory.
Yeah, in any case, I'm very skeptical, you know what I mean? Not very skeptical about what they're saying. What they're saying is obvious. I'm very skeptical why they would acknowledge it at the moment. I mean, it is kind of weird for a central bank. But I would want to see a lot more before I can actually give them credit for it.
All right. All right. Well, I'm gonna finish it up here. So 69.50 is going to be support for the Kiwi. The Kiwi is still in a bearish trend, and the recovery has been kind of minor here. And I'm actually even, I'm speaking of skepticism. I'm a little skeptical that that the Kiwi is going to recover much here. I mean, it's been trading heavy. We might end up just having more of a flag pattern than anything, but I think the 38% retracement should offer some resistance. Ultimately, the 71 cent should cap, but we'll see. We'll see if what'll happen here. But I know the Kiwi is trading heavier than most currencies at this moment. Let's go over to the Canadian. The dollar Canadian, I don't know if you guys have noticed this. Crude oil's come off a little bit, and it's coming off the highs, and so I don't know if they're going to dislodge that that ship in the. Do I keep saying Suez Canal? Did I say that correctly? For some reason, I feel like I'm saying it incorrectly. I keep
Suez. Yeah, Suez.
Yeah, Suez. Okay, I mean, I feel
no,
like
the first time you said Suarez, and that's a football player.
That's a great
Barcelona.
striker. Yeah. No.
Oh, is that it? That's exactly what was on my mind.
Sorry, Stelio, to have to correct you, but he actually plays for Atletico Madrid.
He got transferred. Okay.
Yes.
All right. I don't
during
follow.
the summer transfer period.
You don't follow? Oh, geez, man. Okay, me neither. So I'm just kidding. All right. So support here for the dollar Canadian, because pullbacks have been pretty small, and let's say crude oil does end up reversing lower. I think this dollar Canadian is going to be the first thing that pops. One of the first, currencies to pop here. So resistance is 126.30. That's going to be the resistance right now, and we can't turn bullish until we take out those levels. But I mean, I want to turn bullish. It's
Blake, sorry to interrupt. I missed 1 minute of what you said before. And did you talk about the ship? The ship is actually moving under its own power, and it's leaving the canal. So.
Oh, it is.
That's been apparently resolved. Yeah.
Oh, okay. Yeah. Oh, thank you very much.
I mean, who really expected that? They wouldn't find a solution. Really. I mean, we told people last week that no matter what, this is a very temporary disruption. I mean, there was no chance. I mean, we've got to the point that we build whole skyscrapers in like 6 months. I mean, we can move a ship, right?
Yeah, and that's it's like crude oil is above crude oil above 60. You're like, okay, that's you got to sell it up here. You know what I mean? You've got to sell it up here, because I know I talked about this during the week ahead video, but it's like, okay, well, we should probably be trading closer to 55 in crude, and the only reason why we're up here is because of this canal blockage. It's because of Steve's anal blockage.
Oh,
I'm joking.
That's me.
That almost came out of my mouth, and I didn't.
What can I say?
Am I the only one laughing here? I am. Sorry.
Yes.
I'm making myself laugh, and it's I'm only doing this because
laughing is healthy, so nothing to apologize for.
Well, it's early in the morning anyway. Okay, let's continue on. Bull flag pattern. And no one else laughed when I said that.
A lot of people, but they don't have their microphones unmuted.
93. So I still think a nice little bull flag is setting up here. The stocks are ripping first thing in the morning. Why not?
Why not?
Monday.
I mean, it's first thing in the morning, first thing in the evening, first thing in the week, last thing in the week. That's how it works.
No, it's the ship is dislodged. Let's buy stocks. That sounds like
because stocks really tanked because of the ship. I mean, they were so worried, right? I mean,
of course. 94.25 is going to be resistance. Remember, this was a 127% extension. So we are still bullish on the dollar Swiss. And I have to keep pointing out that the dollar Swiss isn't pulling back. Dollar yen, very similar situation, not pulling back. And notice how we're holding the breakout point. So that as long as we're above 109.30, I know we said this previously about 108.30, but while we're above 109.30, it's bullish. And the next resistance is 110. And you have to think about that if you're short any yen pair, like if you're short any yen pair, because, you know, you look at the dollar yen, this thing looks like it could just, you know, rip up to 112. So, you know, if it does, what does it do to the guppy? What does it do to the euro yen? If it just starts, you know, breaking higher through the
And you know,
70.
Blake, oppositely from the past, this move higher is not going along with a lot of euphoria about, you know, the yen's depreciation. It's like met with a lot of skepticism. So probably that makes it even easier.
Yeah. I mean, I think you're right. It's just not. I think it's a yield story still.
Mostly, yeah.
But everybody right now is pretty much in the same, you know, at least in the same mindset that yields are going higher. So, you know, anyway. All right. So let's look at here's the dollar index. The dollar index is continuing to hold out here, and it continues to hold its gains. 92.50 is support, and you can see we're held up at the 127% extension, but the next resistance is going to be 93.25. And we have to be bullish here. And while we're above 92.50, so let's go over to the dollar Mexican peso. So the dollar Mex is actually holding up pretty well as far as the, you can see the channel, the inverted head and shoulder pattern. So it's the 2095 remains the neckline. That's the resistance. And I think if we can clear 2095, that's when we turn bullish, because then it should, you know, make a move for 2150, 2160, or these trend highs. The shoulder still is trying to carve out. That support right now is at 92.55 roughly. I know we went as low last week as 53, and I'm pretty sure the bias chart, dollar Mexican peso, yeah, we wrote down 2054 last week, and then we dipped to 2053. So 2054 is still resistant, or still support. Below that, we have channel support, which would come in around 2040. So just keep in mind that it looks good, even with stocks as strong as they are. If stocks end up turning lower, this dollar Mexican peso is going to be, you know, it's going to make a good rally. So I think, let's see what we got here. US dollar, Norwegian krona. You know, if crude does come off a little bit, I would expect the US dollar, Norwegian krona can, you know, will find some support. But you can see, focus on the red lines here, and I still think this is a Wyckoff accumulation pattern here. So here, if you guys don't know what I'm talking about, let me give me 1 second here. Where's my pictures? Hold on 1 second. Sorry guys, I just need to find the right folder. Here we go. Where is it? Okay, here it is. So I still think this is valid for the US dollar, Norwegian krona. Zoom that out a little bit. There's the, you know, selling climax, low volume selling climax right here would be right there. There's the rally to resistance, back test, which would be right there. And I believe, if I'm not mistaken, we are on the leg that actually moves higher now. I know it's pulling back a little bit, but we could probably pull back all the way to 845 before moving up again. So, and I think that has, you know, obviously has more to do with what's happening in equities and crude oil and all that all that fun stuff. But I believe this pattern is still in the accumulation phase. We're just at the later stages of it. Okay. So that means that support today is probably, I know we're at the 50%. So 618 comes in at 850. I'm going to write that down. Obviously resistance is going to be 870, but or 868, but I'm going to write down 862 intraday. So intraday 850, 862. We're in a range. Get rid of that. Okay. S&P. Let's talk about the S&P. So as we were just saying, stocks are up on Mondays, they're up on Tuesdays, they're up on Wednesdays, Thursdays, they're up every days. It is Monday. And you know, there's a lot of talk about, you know, there's going to be less selling at the end of month, which, you know, remember we have 2 more days as we wrap up the month and quarter. And you know, a lot of people are like, yeah, you know, there's not going to be end of quarter selling, so let's bid up stocks. So I think we just have to pay attention to this resistance. Basically 4,000 support right now is going to be 39.40, which will be the low, the overnight low. I mean, what do you say here? You know, just stay bullish. You know, I thought this might have been a false breakout, and that did produce a little bit of downside last week, but then we held the support as we had expected, the 50% retracement. If you remember on Wednesday, the support we wrote down was 38.55, and I think we dipped to 38.56, and we bounced like a bat out of hell. So this market is still bullish. I think you got to just treat it as being bullish at this stage. Let's go over to silver. So silver, you know, I don't know what to make out of this, and I'm sure Stelios has all sorts of opinions about silver, but I'm going to just say 24 is support, and I know we had been writing down 2680, and I think I'm just going to have to continue to write, well, I guess intraday, we'll write 2530. But I'm not going to put it as bearish. I'm just going to 24 should be key support. But gold, on the other hand, it's taken its sweet ass time, but it does have that bear flag pattern, and that we have to keep in mind, right? It's a bear flag pattern. It's slowly rolling over. We finally broke that 1720 support we've been writing down. So the next support is going to be the spike low here at 1700. And while we're below 1765, we have to stay bearish. And I'm going to have to put an asterisk there. And remember, we're looking for a 3 drive here. That 3 drive should play out towards 1600, 1585, something like that. Okay. Last but not least, let's talk about Bitcoin. So key support in Bitcoin is 50,000 now. And I mean, I was actually surprised when we broke higher overnight. I guess I shouldn't be surprised because, you know, stocks are, I mean, they didn't sell off. So I guess if risk didn't sell off, why is Bitcoin
Stocks are
sell
stocks.
off? What's that?
Stocks are stocks.
Yeah, I know. Stocks, I mean, you know, stocks continue to stay bid. So as long as they stay bid, you know, Bitcoin doesn't have any real reason to go down. But I think I was, you know, I'm more surprised that we had this false breakdown below this channel, which you know, it's been so well respected. This trend line, it was so well respected, and Bitcoin's been such a technical animal that I was surprised that, you know, we just, you know, bounced right back but again, I think the relationship between Bitcoin and stocks is much stronger. It's much stronger than had previously probably been recognized. I think we just I think it has to be viewed as a risk asset, and while as a risk asset, it's going to move predominantly with risk assets like stocks. So as long and I guess, oh, look at this, I just figured that out. Smart. It took me that long to figure that out. Okay, that this is actually probably more of a channel. So 50,000 resistance is going to be at 60,000, those spike highs there. Then we have 62,000, which will be the all-time highs, but I think 60K probably will offer resistance, and that means 50K is major support, and we have to stay bullish while we're above 50,000, because not only is it a round number, but it's also the 618. Now it looks to be channel support, so we have to stay bullish while we're above it. And
I said last week that it looks like to me that we might see a new high, but I think that if we do see a new high, it's going to come with a lot of divergences. I'm talking about long-term time frames now, like daily, etc.
yeah,
So I think probably another high would be it, and for the time being, I mean, we should see.
It's gonna be it before it goes to 1 million.
No, I mean before we see some, decent move lower, and then it can do whatever it wants to do.
Well, all right. Well, yeah. I mean, I don't know. I mean, it's so hard for me to gauge Bitcoin when it really is more of a. These are the same conversations that we had about internet stocks back in 1999 and 2000.
Yeah.
Like, well, so what do you mean, GoToNet should be going down? They don't make any money, but it doesn't matter. It's the stock's trading at 80 and it's up 30 points today. It doesn't really matter. It's like, oh, they don't make money. They'll never make money. Yeah, it doesn't really matter though. It's still going up.
Until it does, of course.
Until it doesn't. So yeah, you just kind of go, well, I can't really explain it, but I guess technically I can say, well, it's above 50,000. I don't know if I really want to be short. So, and how's it going to react if we hit a new high? Maybe we'll hit the 127% extension, see more divergence, and it allows it to come back down towards channel support. I don't know. It's a tough call, but anyway, here's your bias chart, guys. I don't know if Stelios took a picture, but there it is. And
a long time ago, I took it. Thank you.
Like eons ago. Anyway, so how you guys doing this morning? Today?
Good.
I say morning. It's early in the morning for me still.
Good.
So what's on you guys' radar today?
For me, I just want to see, obviously equities is what's driving everything now, and I just want to see what the reaction is. And at the moment, to be fair, it's very muted. We were down in Asian and European trading, and now we're back to flat. And I'm sure we're going to be.
To be honest, Telio, I mean, we've seen the market recover from real threats to the financial system, and now the market is just extremely complacent that, oh, come on. I mean, when we needed, we even bailed out all banks. I mean, who cares about the fund, right? And I can't blame them. I mean, this is the mentality, and that's how the market keeps working. And the people that keep betting on this, they keep making money, right? So until they stop losing money by following this mentality, they will keep following it.
Yeah, where's that the buy the dip video? I mean,
it's amazing, right? It's relevant every single day for the last, what is it? I think it was produced in 2011 or even before that, something like that. It's still relevant like 10 years later.
But if you think about it, like if you think about stocks in general, and you think about the stock market in general, it doesn't go down. I mean, we may have periods of consolidation. But if you believe in humankind, you believe in ingenuity, you believe in,
Inflation.
technology and develop, and constant growth, then stocks are always going to go higher.
Unicorns, flying
Unicorn.
donkeys.
But there are periods where the market gets overbought, and I had been expecting us for the last 3 years, really 3 years, for us to be in some sort of consolidation phase, which if you go back and listen to a FACE webinar from 3 years ago, my opinion would have been, hey, we are going to be in a consolidation phase. And I think that really would have happened minus stimulus, but COVID happened.
By the way, guys, we've had all the metals taking a real dive.
Oh yeah, what happened there?
All of them, including. I mean, you should see Palladium. By the way, Palladium took an almost
5%, right? Here, I'll let you take over here. Go ahead.
Is there some kind of a news story that came through, Arcelio?
I don't see anything, but yeah.
I'm very curious. Not that they need a story.
Apart from the fact that they just sell something without worrying about getting best price execution.
No. Yeah, which for some reason
more
only happens in metals.
Maybe
margin calls. Yeah, it could be. You're right. Actually, it's one of the first things that gets sold.
There.
Yep. Yeah. Good point.
Here is gold, by the way.
Wow.
Might be because it's the time of the day, also more or less. Here is silver. Here is palladium. Sorry, platinum, and here's palladium. Look at this move in palladium.
What I don't get is, okay, so you have to fund margin calls. Do you have to do it in 1 second? That's what I don't get. Don't you have like 10 minutes to execute? I don't get it. Even when I had to perform large trades when I was at the bank, I'm talking about billions and billions in tickets. I wouldn't go straight ahead and scare the market away. You work it, 5, 10 minutes, an hour, 2 hours. But this, it just doesn't make any sense. But anyway, what do I know? I'm just a poor retail schmuck.
Yeah. I mean, I get it. I'm like, why does it have to be out? Why does everybody have to get out now? But if everybody's sitting there with their same, this, Stel, you've been on big trade desks before. If people smell blood, like, oh, here comes Credit Suisse. They're gonna have to unload this position of gold. I'm gonna jump on ahead of them. You know what I mean? And then word gets out that this is happening. I mean, then it's very predatory, right? Yeah,
true. But this would happen only if it was a specific position that they knew had to be unwound. This is just, I'm selling whatever I can sell. But anyway, I don't know. I'm only speculating. So, I'm sure.
That's all we can do. But anyway, interesting. All right, guys. Hey, I have to take a little break. So thank you everybody for tuning in, and I'll catch you guys later.
Bye-bye, mate.
Thank you.
All right. Thanks, Steve. Thanks, Del.
And Joe, hello, Joe. Joe says forced to sell is different from trading an order. Yes, but even if you're forced to sell, I've seen it happen. You don't have to sell in 1 second. It's basically, that's an order as well. You have to sell, yes, but it's not going to be done in 1 or 10 seconds, never. But anyway, obviously,
it's not in the interest of anybody.
Yeah, exactly.
To do it like that.
It's like saying, oh, I need to sell my house to raise cash for something. I'm going to sell it in the next 10 minutes. Of course not, right? Anyway, whatever. It's okay. It is what it is. And thank you, Joe. And hello, Joe.
Hey, Joe. Okay, so we've had we already just covered the fact that we saw a sharp move lower in metals. I'm curious to see if it's going to be met by more selling. Technically speaking, it looks likely because at least gold and silver. I mean, they were clearly they are clearly still in corrective consolidations, right? I mean, I kept mentioning this trend line here in gold, and in the case of silver, we broke through this channel. We are in a larger formation. God knows what kind of a formation this is, but it's corrected. But I mean, we can easily see more downside with like 22.5 being the first area of support. Now we're currently testing again we're actually below it, but it's intraday. So I'm going to say we're testing again the 200 daily moving average here in silver. So let's see if this time we're going to manage to close above it. Here you can see it, this blue line passing through. Now, if silver closes like under pressure and negative, it will have formed. Currently, the daily is bearish engulfing, so quite a formidable bearish candlestick, which will point to further losses. And as I said, I'm more than happy to see more downside here in precious metals and the equivalent equities, because I will be more than happy to start buying lower. So yeah, I think it's rather likely, especially considering how we're starting the week. Now, crude oil had a rather volatile day, but currently is more or less unchanged on the day. Let's see if the sell-off in metals can spark another leg higher in the dollar, and in combination with the news about the Suez Canal, we can see the next leg lower beginning for crude. I do think that as long as we trade below this channel trend line support, the broken channel trend line support, I do think it's more likely to see more downside in crude before we finally stabilize and see the uptrend resuming. I don't think this was enough to correct the trend we've seen since literally a year ago almost. I mean, in a few days it's going to be a year. Now, having to do with copper, nothing has really changed, as you see. Not much of a movement. This looks more to me like a symmetrical triangle, which would favor a continuation higher more than anything. Nickel, remains rather heavy. I think it should continue lower sooner rather than later. Now, I'm still, since we mentioned crude, here is USD CAD and here is USD NOK. I'm still unconvinced here. I don't see a really big follow through. USD CAD is still toying around with breaking through the channel. USD NOK is even lower than that. It got rejected from this triangle trend line resistance. So yeah, I do see that we've stalled here and we're consolidating, but do I see enough evidence that we're actually reversing higher? No, not yet. That's why I haven't even closed half of my position here in USD NOK, because it has failed to break higher. Now, can it continue to stay in a range if crude starts another leg lower? Yeah, it doesn't sound very likely, right? But so far it's holding. Now, from the rest of the dollar pairs, I would have to say that, I find it very, very hard to not look at this chart and see this move lower in the cable as corrective, right? For the time being, at least. I mean, we did find a high up there, but look how orderly the move lower has been. We're even, with the exception of like half a day, we're even holding through this ascending channel. So I think we break through this descending channel. I see no reason why we're not going to be attacking the highs once again, which, of course, many things here don't fit with each other, meaning I can say the same thing for Aussie, right? So far, the move lower can be viewed as a corrective orderly pullback. Only the Kiwi looks more aggressive. I mean, a lot more under pressure. Euro definitely doesn't look as good as the pound, but I mean, yeah, a little overthrow to this channel so far isn't enough to really call this a big sell-off. But at the same time, if you have a look at the DXY, it's, it's not looking like it has stopped yet. So, I get all these mixed signals which force me to stay in a wait and see mode. Um, I mean, if I can say one thing with certainty is that, first of all, the move higher in the dollar is not impulsive. Now, that's the only thing that's more than obvious here. So even if we see more upside, I clearly feel this is a corrective rebound. Second of all, I don't think it's easy for this move to gain in momentum as long as stocks and risk assets remain so well bid, right? So although I don't have a very strong argument why somebody shouldn't be long the dollar here, I mean, other than the fact that you're going against the trend clearly, um, I would find it very, very hard to propose such a position at the same time. So I still think this is a very hard period of the market to trade. I mean, if I was in need to trade right here, right now, I would be feeling kind of desperate because I wouldn't know where to start from. I would be looking something that doesn't involve the dollar, um, because I think the rest are very mixed. Now, we mentioned the euro and the pound. As you see, the pound clearly overperforms the euro, and you can see the reason why, right? Because the euro pound still remains under pressure within this descending channel. Earlier today, we posted a lower low, which was a 14, 15-month low. So keep that in mind. Euro pound at 14-month lows, right? But as I've said, the big picture here is that 82.80 is the line in the sand. Below 82.80, I think we opened the door for a much, much, much bigger move lower, right? Now let me go through some of your questions. Deutsche Bank is restructuring, not only bad loans, they reduced exposure to China, emerging markets, credit risk. Yeah, something if I had $10 for every time Deutsche Bank has been restructuring during the past, what is it now? 7, 8 years, 6, 7 years, I think I wouldn't need to work anymore. So speaking of that, I haven't had a look at the stock in so long of a time. Oh, you can see how long it has been. Yeah, let's see. Deutsche Bank. Is it a channel? Not easy to say. Look at this. And I'm really not convinced this is more than a bigger correction higher. I'm very, very skeptical about Deutsche Bank. They've made so many failed attempts. Now, a rising tide lifts all boats, so it's seeing some, some favorable price action. But I mean, just look at how depressed this stock price still is, right? It was trading at 140 in 2007, and now we're talking like it's a big success, that the fact that it's at teens, back at teens. Yeah. Let me see. Gold flashed. Yeah. We mentioned that. Thanks, Ingmar. Yeah, not only gold, and yeah, probably some kind of liquidation. Yeah, platinum, palladium as well. Hi, Steven. Tell us, what do you think about the Nikkei? Will it increase as USD yen strengthens? Thanks. Yes, absolutely. Let's have a look at the Nikkei. Haven't had a look at it in a few days. So here it is. Just look at it, right? It remains, very well bid. What
It's
type
amazing,
of
right? Most
Yeah.
indices, the pullbacks are just non-existent.
Yeah. I mean, it looks more likely than not that it's going to continue high, right? Now for upside targets, there you go. There are your upside targets. Yeah, I mean, look at this. Definitely remains very well bid. Let's also draw this trend line. There you go. Yeah. I think, keep looking higher until proven otherwise. Definitely bullish against, this that could even prove to be a double bottom here, right? At 28,300. So yeah, I mean, it has done nothing wrong yet, right? Same thing with USD yen. Once it really turned higher, it has done nothing wrong, just up and phases of consolidation. That's it. So yeah, I mean, clearly the path of least resistance remains to the upside. German Finman Olaf supposed to appear in hearing on the Warburg Bank scandal. What's that, Ingmar? You're a local, so you know better. What's the Warburg Bank scandal? Stelio, any idea?
I don't remember, actually. There's so many scandals, I don't remember which one that was.
Yeah, tell me about it. If you remember, they even had scandals in the Vatican bank. You remember, for money laundering,
yes.
etc.
Yes.
I mean, that's just amazing stuff, right? You can't make this stuff up. Oh, let's see what it is. The long-running CumEx tax evasion scandal as a 10-year state of limitations on criminal. There's a person with BaFin, the German financial regulator, which has already been. CumEx fraud uses a form of dividend arbitrage between the date that the share was acquired and the date on which a dividend was paid to reclaim payment of withholding tax, sometimes on many occasions. It requires creating the impression of multiple owners of the same share at the same time, a concept of economic ownership which appears now to have been debunked. The CumEx withholding tax reclaim system, which started in the 1990s and lasted until at least 2011, is alleged to have cost European states some 55.2 billion in lost tax revenue. Okay, good. So it was estimated to have been lost to Germany, 17 billion from France, 4.5 billion euros. Okay, less money to go to bureaucrats. I see nothing wrong there. An investigation. Okay, good. Let's see what they find next. It involves Denmark as well. Okay, interesting. Anything else you want us to have a look at, guys or gals? The financial minister is a suspect himself. That's quite interesting.
Yeah.
And Palladium, intraday Palladium made is,
it's going lower.
especially in days like that. It's, don't forget that Palladium is also like, not very liquid, right? So keep that in mind. I mean, it's not an easy asset to trade for the very short term. That's why I would never trade it short term. I mean, before we had that liquidation, that was looking like a healthy symmetrical triangle intraday, right? Which I would expect to break higher. But look what happened here. Now, keep in mind this area we're now reaching is an area of support. So here's the first area of support, like 25.10 is the first area of support. I think we break through that. We open the door for a move lower, significantly lower, actually. There is no significant support until we get down to closer to 2300. So keep that in mind. quite a nasty price action here. So I would be very, very careful. Following this move, I would be very, very careful. Now, crude oil looks appealing if you ask me for intraday. I think this looks appealing. It looks poised to me one way or another to probably produce a leg lower sooner rather than later, at least one more, right?
Look at bonds as well.
Let me have a
Afterwards,
look.
10-year. Look at 10-year US is back to 170. So I agree with oil actually.
Yeah. Yeah, if you see the move lower was now looks to be corrective. I mean, yeah. Yeah, still holding this trend line. So yeah, they look very well bid, to be honest. 30-year as well, same deal. Yeah. And here's the DXY. Short term, this looks more like a pennant as well. Little pennant. Although, as I said, I mean, so many dollar pairs don't look that bearish. I don't know. It's such a nasty market at the moment. Patience. That's the only thing I have to suggest.
Okay, cool. Thank you, Steve. That was
okay, guys.
That was very good.
Talk to you later.
Thanks,
Bye-bye.
everybody. Bye-bye.